Well, it's actually as good a deal as we thought was possible, but it isn't actually a very big deal because it's just, as you've been saying, it's just a ceasefire. It's just 90 days. The really big issues are exactly the ones you've been discussing about tech transfer, IP theft, non-tariff barriers behind the border, subsidies and so on, and those have not been looked at properly yet. So, you know, it's as good as it could have been.
What does the pause mean in terms of allowing either party here to take advantage of the opportunity of a 90-day window? I've read a lot of commentary through the weekend suggesting that this is a Trump strategy to tighten the thumbscrews on the Chinese, whilst it gives him some opportunity to take the pressure off his base in the Midwest, who are suffering from the Chinese reaction on agricultural imports. Is the pause to benefit Trump or to benefit Xi at this stage?
Well, I think that Trump seems to be responding to different pressures, both from the electoral base perhaps, but I mean the midterms are out of the way now, but also from people within his own administration, and there's clearly a hawkish side and a dovish side on this, and he seems to have come down somewhere in the middle.
So what does it mean in terms of global confidence? Because as we've progressed throughout 2018, the increased rhetoric and more tariffs coming into effect starts to squeeze different parts of the economy. But if we're not pulling back on some of those tariffs and we still don't have certainty that the trade spat is going to go away completely, does that stop business investment? Does it stop some of the decision making improving?
Well, I think it's been a factor in dampening business expectations and investment. It's not been huge in terms of the global growth story. I think there are other things that are driving that. That are more important. But yeah, as long as the threat of escalation of tariffs is still there, then that cloud is still on the horizon, and I don't think that's likely to lift until, well, for a long time yet. I think the US will want to have a continuing trade conflict with the Chinese next year.
One of our viewers has tweeted in, doesn't the China breakthrough have the ring of complete denuclearization? Which is kind of true. I mean, we've seen these issues sort of pushed to the brink by the US president, and when it comes to North Korea, for instance, but then also rode back by the president in terms of this breakthrough moment. So it feels a little bit like that with China. We were pushed to the brink with this trade spat, higher and higher trade tariffs, and now we've come back a little bit from that edge. But what have we solved? We haven't actually solved anything. China's still buying some things from the United States, some of that's agriculture, some of that helps different parts of the United States, but we're not really seeing any progress from where other US presidents have been at this point. So what would it take? What do we really need to see change under the Trump administration for the history books to be very favourable to Trump?
Well, in theory, you would need some kind of comprehensive trade agreement that has a mechanism for policing it as well, where the Chinese agree that they're going to limit their IP theft or forced technology transfer, where they're going to reduce the levels of subsidies that are hidden through lower interest rates and bank loans and so on. It's really hard to see that happening. And it's also hard to see how the US would implement it, because although there was an agreement at the G20 that there'd be they'd review the WTO and potentially beef it up, the problem with that is that the US doesn't really believe in multilateralism. They don't really want a powerful WTO, so it's not clear what the mechanism would be for enforcing any agreement, even if it were reached.
So let's just park the G20 for the moment, because that's effectively what they've done. The market now moves on to the issues that were underlying this one, and that's what happens with Brexit, and that is what happens with the oil price, with the OPEC meeting upcoming this week. Given that there is still a backdrop of niggling concerns around risk assets, do you feel that this bounce we've seen this morning is going to be short-lived? Are people going to fade into it or be emboldened to buy it in the expectation, well, we've kind of dealt with one issue, these other ones are going to be dealt with as well?
Yeah, we think this is likely to be short-lived. I mean, our forecast for equities is to continue falling over the course of next year. Quite how long this bounce will last, I don't know. But yeah, I think it's a short-lived thing.
Be wary then.
Certainly, yeah.
All right.
So even with the Fed, I mean, you were just pointing out about the Fed when we're at the wall, changing course, becoming more neutral. I think a lot of market participants now say, well, surely this is a more positive environment in 2019 for stocks. You haven't changed your view on the back of Jay Powell?
No, I actually think the comments that Jay Powell made last week have been somewhat over-interpreted. My feeling was that a month ago, when he talked about the rates being a long way below the neutral level, that was when he rather misspoke. And last week there was a concerted effort to sort of get back on track, which is to say that the rates are just below the range within neutral. I mean, I don't think there was anything he said that wasn't in the FOMC statements and the minutes from the last meeting. So I think that's been overinterpreted. I think we'll see the December rate hike, and I think we may well see a statement later this week that the Fed is on track to continue raising rates during 2019.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.